Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Sunshine Insurance Group Company Limited Annual Report. Sunshine Insurance Group Company Limited offers a diverse range of insurance products and services in China. The company operates through three main segments: life insurance, property and casualty insurance, and other businesses. The life insurance segment provides life, health, and accident insurance products to its customers. This includes various types of policies that cater to different needs and requirements. In addition to life insurance, the company also offers property and casualty insurance products. These include automobile, accident, short-term health, guarantee, liability, agriculture, and commercial property insurance products. The other businesses segment provides credit and guarantee insurance, as well as asset management services. This indicates that Sunshine Insurance Group Company Limited is not limited to traditional insurance offerings, but also provides financial services to its customers. Overall, the company's diverse range of products and services makes it a comprehensive provider of insurance solutions in China. Sunshine Insurance Group Company Limited market capitalization of 42 billion is significantly larger than the average industry peer of roughly 2 billion. This shows that Sunshine Insurance Group Company Limited holds a significant advantage in their industry. Sunshine Insurance Group Company Limited trades at a lower price-to-earnings ratio of 6 times and a higher price-to-book ratio of 0.63 times relative within the industry. This shows that investors are pessimistic in the industry in general, and we should dive deeper on the reason. Additionally, the stock appears attractively priced, even though it is trading at a higher price-to-book value than it appears. We will need to evaluate if the business earnings is sustainable and if the assets are valuated rationally. Overall, we need to identify if this makes a good investment on the long term, or is it going to be an extended period of low valuation or a value trap, and if it would be better to be investing in its peers than Sunshine Insurance Group Company Limited itself. The company exhibits a very high leverage profile, with liabilities accounting for 89% of total assets. This elevated debt level warrants heightened caution, as it may limit the company's financial flexibility and increase risk during economic stress. We have to further examine the industry and the nature of the business to determine if they justify the current valuation. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The company have a dividend yield of 5.79%. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The primary drivers of revenue growth or decline in the insurance industry can be identified from various sources. On the growth side, gross written premiums and green insurance coverage have contributed significantly to revenue growth, with increases of RMB 58 trillion and RMB 15 trillion respectively. Investment efforts in green industries and Belt and Road Initiative risk coverage have also led to substantial revenue growth. In addition, insurance revenue has seen a 2% increase, while interest income and investment income have increased by 4.6% and 23.3% respectively. The share of profits and losses of associates and joint ventures has also seen a significant increase of 42.5%. Furthermore, new contracts added to the group and increases in fulfillment cash flows relating to future service have contributed to revenue growth. On the decline side, accident insurance and health insurance have seen declines of 9.9% and 2.3% respectively. Automobile insurance has also declined by 3.3% year-on-year. Additionally, liability, cargo, and others insurance categories have experienced a decline in underwriting profit. Regional declines have also been observed in Hubei, Zhejiang, Hebei, Guangdong, Jiangsu, and Anhui provinces. Overall, the growth drivers are largely driven by investments in green industries, Belt and Road Initiative risk coverage, and increases in insurance revenue, interest income, and investment income. On the other hand, declines have been observed in accident insurance, health insurance, automobile insurance, and certain regional markets. The net income of the company saw a significant increase of 27.1% in the recent period, reaching RMB 25.23 billion. This substantial growth is a positive indicator of the company's financial health and performance. However, a closer look at the profit margins reveals a different trend. The underwriting combined ratio for automobile insurance decreased by 0.9 percentage point to 98.2%. While this may seem like a minor change, it indicates that the company's ability to manage costs and maintain profitability in its core business has been impacted. This decrease in profit margin could be attributed to various factors such as increased competition, rising operational expenses, or changes in market conditions. Despite this setback, the overall net income growth suggests that the company is still performing well and adapting to the changing market landscape. The company's financial performance has shown significant improvement in terms of generating operating cash flow. In 2025, the net cash inflows from operating activities reached a substantial 64,316 RMB million, marking a notable increase of 97.3% compared to the previous year's figure of 32,603 RMB million. This upward trend indicates that the company is successfully managing its operations and generating sufficient cash flow to support its growth. The company's debt level has remained relatively stable over the past year. The aggregate balance of bank borrowings and bonds payable have both remained unchanged at RMB 0.11 billion and RMB 19.52 billion, respectively. This suggests that the company has not taken on any significant new debt or reduced its existing debt levels. In terms of interest expenses, there is a slight decrease in interest paid from 907 million RMB in 2024 to 949 million RMB in 2025. However, this change is relatively minor and may not have a significant impact on the company's overall financial performance. Additionally, expected credit losses decreased by 32.5% from 2377 in 2024 to 165 in 2025, which could indicate improved credit management practices. Overall, there has been no significant change mentioned regarding the company's debt level or interest expenses. The recent financial results show a mixed performance across various segments and regions. On the positive side, the life insurance segment stood out with significant growth, boasting a 27.5% increase in gross written premiums, GWPs, year-over-year, along with a substantial 48.2% rise in the value of new business and a 13.3% boost in contractual service margin. The science and technology application segment also demonstrated impressive performance, although specific metrics were not provided. In contrast, the automobile insurance business experienced a decline of 1.8% year-over-year. Furthermore, the property and casualty insurance segment's performance was not explicitly mentioned as poor, but its lack of mention alongside the life insurance segment's highlights suggests it may have underperformed. The results indicate that certain segments are thriving, while others require improvement. The life insurance segment's strong growth is a notable achievement, while the automobile insurance business and property and casualty insurance segment need to address their respective challenges. Management is emphasizing the importance of balancing progress with quality in their pursuit of growth. This is evident in their successful implementation of the new Sunshine strategy, which has led to steady and balanced expansion. The company is also prioritizing public welfare initiatives, green transition, and seizing opportunities in green development to create a harmonious society. In terms of specific business areas, management is focusing on stable and predictable returns, enhancing profitability, and improving sales force quality in the P&C insurance sector. They are also accelerating the building of core corporate capabilities through model innovation and data technology, as well as adopting a multi-channel development model for comprehensive growth in value business. Furthermore, management is optimizing resource allocation structure, advancing profit source management, and strengthening credit risk management to improve overall efficiency and profitability. Additionally, they are continuing to entrust Sunshine AMC with managing part of their investment assets. Looking ahead, the company is confident that it will enter a golden period of high-quality development by 2026. The company has a history of paying dividends to its shareholders. On multiple occasions, it is mentioned that dividends have been declared and paid out. For instance, on page 9, it is stated that a dividend of RMB 2,185 million was declared. This amount is also equivalent to $2,070, as mentioned on page 10. Furthermore, pages 44 and 46 confirm that the company has indeed paid dividends, with the final cash dividend being declared at RMB 0.19 per ordinary share. Additionally, in the liquidity analysis section on page 80, it is explicitly stated that the company has paid dividends. The proposed final dividend of RMB 2.19 billion mentioned on page 101 also suggests a continued commitment to paying out dividends. Overall, these references collectively demonstrate that the company has a track record of paying dividends and continues to do so, indicating a strong focus on returning value to its shareholders. That concludes the financial summary for Sunshine Insurance Group Company Limited. Feel free to comment below, and I will be happy to answer them when possible.